Hey everyone, Scott Larrabee here with Mortgage Network in Bangor, Maine. Thanks for checking out the quick video. I wanted to talk with you today real quick about a term that you'll hear a lot when you start getting into the mortgage pre-qualification process, or maybe just snooping around online. And that's debt to income ratio, or as guys like me refer to it, DTI. Now, what is DTI? It's very important. It's something that every loan program has. They vary from loan to program, the DTI. And it can be confusing to folks as to why they qualify for one program, but they don't qualify for another based on this number. So this is actually some math that you can figure out at home. So I want to give you the formula and how we determine it, or at least the basics, so that you can be a little more empowered while you go through the mortgage process, okay? Well, first step is we take a look at your income and we determine what your qualifying gross monthly income is. Now, for this scenario here, we're not going to go into how we determine qualifying income. That's for another video. But for this scenario, we're going to say this borrower has $4,300 in qualifying income. So from there, we need to determine what are debts and liabilities. And that would be number two. So liabilities and debts that we consider now the amount of debt you have, the credit card balance, the car balance. That does matter. That is factored into the equation in some way. But as far as this equation, what we're looking at is what the monthly payments are. So in this scenario, I have a borrower with $500 in monthly payments. And those monthly payments consist of a $250 car payment. That's pretty cheap. $100 in student loan payments every month. $50 credit card payment and $100 personal loan. Now this is just an example borrower, but this is pretty normal, and this is something I think a lot of people can relate to. Now step three is this borrower wants to look at getting pre-qualified for a $250,000 home with 20% down. And in this scenario, just so you know the math, I'm using a 30-year fixed mortgage with a 3% interest rate. So that's about $1,100 a month on what we call principal and interest, okay? Now we have PITI here, which is principal, interest, taxes, and insurance, because your mortgage payment actually consists of those three things. Principal and interest, which we just said in this scenario is $1,100. I'm using $200 a month or $2,400 a year for average property taxes. Google that, that's pretty average for Maine. And $50 a month for homeowners insurance, because you need to insure the home. So with this example borrower, that's $1,350 a month. When we add in the $500 of liability payments, you have $1,850 every month that this borrower is responsible for with this proposed mortgage payment. So we take this number here, the $1,850, just showed you how we got it. We take that $1,850, we divide it by the gross monthly income, and that is what gives us our DTI. Now I use the 43% example here because that's kind of the magic number. Most loan programs, that's what they're looking for. We can go higher, we can go lower. That varies depending upon every scenario. But one thing to consider here and take away, and I'll end with this, is why debt to income ratio can be confusing, is just take the taxes, for instance. If you went from a property with $2,400 in property taxes every year to a property with $3,500 in property taxes, your debt to income ratio would go from 43% to 45%, because now you'd be paying about $290 a month in property taxes. So this number can be affected by income, by homeowners insurance, by the taxes, the property you have to pay, of course, the principal and interest, the amount of the loan, the interest rate. There's a lot of factors that, as you can see, determine the debt to income ratio, but in the simplest of ways to determine it, this is how you do it. So hope that's helpful in you understanding debt to income. It's a very common thing that you'll hear, and something that your lender is going to use to qualify you to whatever particular loan program you may be interested in. So if you have any questions on that, feel free to reach out. I'd be happy to help. Also, anytime you want, you can go to www.scottlarrabee.com and you can get more information, or in 5 easy steps, you can start the loan process, get pre-qualified, and we can talk about all this fun stuff together anytime you want. All right, if you made it all the way to the end of the video, you're a champ. I appreciate it. If you would, give it a like and a share. That might help someone else out, and it surely does me. I appreciate it. All right, till next time, make it a great day.